Hello everyone, welcome to this video tutorial. In today's tutorial, we're going to introduce another technical analysis indicator, RSI. RSI stands for Relative Strength Index. We have already introduced a similar type of index, which is Stochastic Oscillator. Both of them are momentum indicator, which is used by traders to measure the overbought or oversold conditions. Because they're similar, so I will bring both of them into this tutorial, and meanwhile I'm not gonna only focus on the indicator itself, and also I probably will include some of other technical analysis um, along with the this tutorial. So let's jump into the application. Before I start, I want to share with you guys one of the very useful unified chart opening mode that we have been using. So as you can see, in this setup, I have the exponential EMA. So I have five weeks EMA, and 10 and 20 and 30 and 50. Each one of them I set up different color, and so I save them. And also, as you can see, I have a Bollinger Bands open up with this setup as well. The Bollinger Bands, there is one thing, because I already have a cluster of moving average lines. So the center line of the Bollinger Bands is a 20 period of SMI, simple moving average. So I just set up this middle line as the same color as the background. So I don't want to see the that one drawing. So this is one type. As you can see, another thing is I set up is when I click the line chart, as you can see, I can hide all the charts, but only leaving the average line inside. So how I'm going to do this is in the line chart setup. If you go to the chart menu and display and setting, if you select the line chart settings, as you can see, I set up the line chart color as the same color with my very similar color with my background. So that's why if you click the line chart, you can actually kind of hide it. So I'm not I hope hopefully you will think this setup's useful, and you can set up your chart similarly like me here. So because whenever you open the chart and you have this kind of settings, so you pretty much very clearly what's the position now for this particular security. Is that above which EMA? And is that overbought from the upper level Bollinger Bands or the lower bounds of a Bollinger Band? So you know what the current situation is. Okay, so all right. Okay, let's jump into our RSI part. So whenever you want to add RSI indicator into the chart, so you go into the indicators drop down list and you select the RSI, relative strength index. I should call it relative strength index. I click that RSI. As you can see, the RSI line is drawing into your chart. Okay, so let's go through some of the configurations here. The first one is the line width. Not much, because the RSI indicator has a number reads from 0 to 100. The center line, we have a very so the blue color is the center line is 50. Okay, so because the range is from 0 to 100, and also you have a upper range and down range, bottom range. So first of all, you can configure this line width. All right. Second one, you can configure the RSI line color. Also the dash configuration. Okay, and the average R is the calculation parameter that you use to calculate the RSI. Usually the 14 is default, which means we are using the 14 period of average gain or loss to calculate the RSI. The very important thing is the overbought condition. The 70 is the default number, but depends on the security. If some people are using 80 as the overbought, which means ending read before that 70 line that we consider as overbought. Same with the oversold. The default is 30, the tiny red line here, as you can see. So that's the oversold number. You can configure any other number as you want, but the default is 30, and in any number reads from the RSI line, if it goes below that red line, that means I oversold. Okay, so that's pretty much the setup of this indicator in our application. Let's come back here maybe later. Let's go to our first chart. As convention, we're gonna simply go through the calculation process of how we calculate the RSI, because based on that you will have a better understanding of how this indicators numbers come out. Okay, so for comparison purpose, I also bring up my stochastic oscillator, but I will go through that later. So basically, because it is also a momentum indicator, so how we calculate this number, we're using the RSI number calculated in 2 steps. The first steps, we have to using this 14 period. Basically, you are using the previous 14 units of price gain. Okay, so you need to get the average gain and average loss. How we get those? Basically, you're using today's close to minus previous day's closing price. So look at here, we're also using the closing price. Okay, so you have the 2 closing price. If today's closing price is higher than previous closing price, so that's the gain. So we're using this difference to put it in the gain. If today's the closing price is lower than previous closing price, and then we get that difference as well, and put in the average loss. So basically, we're keeping the total. So we calculate the 14 period of total average gain and average loss, because if we have 14 period, so we'll use it divided by a 14 because it is a moving calculation process. So we're using previous average gain. So for the previous 14 units average gain, okay, we multiply 13 and plus today's gain, and when recalculated and divided by 14, so you get another average gain, because this one is the current average gain. All right, so same process, we do the calculation on the average loss. What the purpose is that is because the inventor of this indicator probably want to have a number reads from 0 to 100. So how you get a number from 0 to 100? So you're basically using 100 to minus something. This something is RS that we calculated, and because we're using this formula, so we make sure the RS number is between 0 and 100. So that's why you're using 100 to subtract this number. You get a number between 0 and 100. So the average gain and loss in here, the calculations make sure when the average gain is bigger, right? So you get a big number, and if its average loss is bigger, you get a lower number, which is approaching to 0. So as you can see, this, because we're using this average 14 units here. That's the 14 average on period here. So we kind of smooth out this price gain and price loss. Okay, so as long as you know how we calculate it, so that's okay. So let's move on to the next part. Hopefully, guys, if you guys still not quite understand that calculation, you can go into the Investtoolset website and check the algorithm. But I'm sure you already know, you already heard about many times talking about the average gain and loss. So that's bear in mind. So by using this method, we smooth out lots of noise for the overbought and oversold. Okay, so because this number is the average number, as you can see, so many arrows here. If you compare to this stochastic oscillator, and you can see during the same period of time, the stochastic oscillator generates lots of overbought signals like here, but meanwhile you can see we don't see any overbought, right? Same with the oversold. The stochastic oscillator frequently generates the oversold signals, but RSI doesn't. All right, let's moving on here. As you can see here, the RSI finally appears the first time oversold right here, but before that, many oversold signals already appears in a stochastic oscillator. So what that really means? So if some people tell you the oversold in some is oversold in a stochastic oscillator, and the same thing is if you have a oversold signal in relative strength indicator, which is RSI, and that you will know which one is most significant, because the RSI indicator generates much less overbought and oversold signals than other type of oscillator, at least compared with the normal stochastic oscillator. Okay, that's the first thing I want to tell you. The RSI generates much less signals, so it's more significant if you see RSI oversold. Okay, let's go through this particular chart, because this one is the Rio Tinto. It's a miner giant in Australia. I think it's a global miner, very big company. So let's take a look at their chart. So how people normally use the RSI is pretty much similar with other types of momentum indicator. We're trying to get it overbought and oversold signal. So because RSI is smooth out values, so it's hard to get those. So we tend to use RSI overbought and oversold signals to generate buy and sell conditions, maybe. Another type usage is to use the divergence convergence. The divergence of the RSI with the price action, and you can by using the divergence, and you can see the potential trend reversal or the potential trend weakening or strengthening signals. All right, let's go through here. So that's the first one, when the shares jumping, when the price falling at the very beginning. As you can see, the price falling, but the RSI is actually not creating a lower low. This is called a bullish the bullish divergence. As meanwhile, you couldn't see the divergence from the stochastic oscillator, but you do see this, indicator of RSI have a divergence with the price action. That means a bullish signal. That means the underlying trend might be reversal. So this time seems is correct. So the price start rising. Okay, so that's first signal. When you come to here, as you can see, the shares start to turn into a downtrend. So what do we mean by downtrend? In the Dow theory, the downtrend means if the security creates the lower high, also the lower low. If you see this, that simply is a downtrend. Okay, so once you have multiple peaks and multiple troughs, you can confidently draw a trend line like we did here. Okay, these two lines. The downtrend, the upper one is more significant. We usually use in the upper line here. We don't care about the below, but unless if the prices are falling a obvious pattern, so you can connect in the bottom line as well. So as you can see, this line below represents another trend line, which means defines a trading pattern. Okay. All right, as you can see, until this day, the price actually breaks out of this trading pattern, and then RSI creating an oversold. Do you want to buy from here? So this really depends on the analysis. If this happening, so you have to wait this shares if you want to go long. If you want to, you need to wait until this price going back to the trading pattern again, right? And then you buy. And also you observe the RSI right here. It's oversold. Okay, maybe because it's oversold. So maybe you can buy in relatively cheaper price. So it's up to the situation at that moment. So once you see the price stays back to the trading pattern, you can buy, 20-30%. I mean, it depends on your situation. Yeah, so that seems like a good buy, just purely on the pattern break, false breakout, and also the RSI oversold. You generate some profit. All right, everything is on in theory. Okay, so as you can see now, price started, rising and approaching to the upper trend line. So that's the most significant time. As you can, meanwhile, RSI going up, and it breaks out. People buying some. I would like to buy when the pattern's is broken. So probably that's the good buy. Okay. But once another divergence, well, we already talked about the bullish divergence, and be honestly, this type of bullish divergence is not, you can't see it pretty often in the charts. Once you see it, or you need to pay attention and analyze it carefully. But this type of divergence comes up very often. So this is the bearish divergence. What that means is when the price creating higher high, as you can see here, and RSI have a lower low, not very significant, but still you can see if I move this arrow a little bit away. Okay, as you can see more clear here, so that's called bearish divergence. Once that happens, that means some sell-off might happening, especially because we have also the Bollinger Bands open. You can see the price keep stick with the upper bound of the Bollinger Bands. So that means over a board as well. So as you can see, the price does fall a little bit. Okay. As the times move on, as we can see, the price actually stays in a very solid uptrend until here you can see another divergence come up. The price created another high, but the RSI doesn't create a high. It's actually a divergence. So that means this uptrend might be in danger. Might be in danger. Okay, as you can see, the divergence signal is not always a sure thing, and it just indicates this trend might be in question. So be careful. So as you can see, because this time is different than last time, and this time when this divergence appears, we confirm that divergence by the next day's falling week, right? So, but this, as you can see, this time the price breached out and close above the type 2 Bollinger Bands upper band. So that's an indication of overbought, right? So maybe, as you can see, meanwhile, this time even the Stochastic Oscillator also creates a divergence. So it's double divergence plus a overbought signal of the Bollinger Bands. So probably the price will sell off. As you can see, it does falling. This time is even close below the 50 weeks moving average EMA. So as you can see, the price stays a bit. This time the RSI didn't create an oversold, and it's jumping back again above that level. Yeah, so times move on. Okay, so the price falls in the falling into a trading rectangle, so it's break up again. Okay, that happens. So as you can see, another divergence RSI and also the Stochastic Oscillator with the price appears this double divergence. As you can see, the price falling sharply. You can in this type of situation, you can actually draw a trend line here. So if it breaks, you sell. So just you can be aware of that. Keep falling wicks. That's going to be very headache. Okay. So yeah. So as you can see, this the usage of RSI. once you can see the price falling this trading range, the stochastic oscillator produce more accurate overbought and oversold signals because the range is pretty much the same. But as you know, because the way of how we calculate this stochastic oscillator, if you are in the pretty much the same range, this read may be more accurate. Okay. Now, this is as this one breaks out this trading range. So that's very significant. Okay, so this pattern breaks out from here. As you can see, the price go up and the volatility increased as well because the range widened up. And as you can see, you have another divergence. Okay, same with the double divergence of stochastic oscillator. And now I have to be careful again. As you can see, you can draw a trend line, or either you just simply take a look at this, because most of the time the price stays above this pink one, this 5 weeks moving average. Once it breaks down, you better sell. Okay, as you can see, this time there is big sharp fall here. You can avoid it. All right, so this is the first chart. I go through from the beginning to the end, pretty much present day, and yeah, we have seen how people are using this RSI as the over divergence, and also how to use it in the overbought and oversold. Alright, let's move back to this one. What I mean is, because we have a overbought and oversold defined as 70 and 30. Alright, some people say when the share is moving solid uptrend, okay, so the oversold signal might not be 30 because it's never going to that low, because in the strong uptrend, so the oversold should be close to 50, or it depends on your chart. So for this instance, looks like the 50 is the oversold in the upper trend stock, right? So if you buy in here, you pretty much buy like every time this uptrend is correct itself, and I always have a good buying opportunities right here. You see it tips touched 50 again, right? So that's the idea. And conversely, if the share is in solid downtrend, so the overbought might not be 70. Okay, so it's also close to the center line. Depends how bearish that trend line, that downtrend is. So you have to find out by your chart. Okay, so to look at what's the appropriate overbought condition in a downtrend. Okay, so this is the one thing I want to mention. Okay, let's go to the second chart, which is the Commonwealth Bank. Let's just go a little bit more, as you guys will get more idea of this how we're using RSI. Okay, so this time, as you can see, the price have a divergence, price moving higher, RSI moving lower, right here. So that's the bearish sign. Price fall. Okay, as you can see, it's trading range again. We need to waiting for the breakout. So in this kind of situation, you can just you draw a, because that support is too obvious, right? So we need to bring it back. That's why we have draw a support line right here. You can have a rectangle for this trading range, or if you like, or you can draw a trend line from here. Yeah, so it's just look, it's like in here you probably can draw a trending range here. It's more accurate. Okay, until you break above, that's fine. You get it. You get an entry point from here, but very quickly you get a divergence of that. So what time, basically, it's just really the divergence. It doesn't really tell you the timing. As I told you guys, you have to see the very bearish sign. For example, it's close below the 5 moving average, that pink line, as a selling signal. But if you wait more, the price is falling significantly lower than your entry points. So just make sure this type of situation, you need to have some way to sell it, right? So normally I do is just draw a upper trend line to estimate that little pattern breaks down, I sell to avoid more loss, right? As you can see here, the price actually breaks down quickly because let me just explain something. So for example, remember we draw a rectangle as the training range. When the prices break above this trading range, they shouldn't be the upper level of this rectangle becomes a support, and you really shouldn't stay back to this trading range. If it is like this situation that's really bearish, that means this is a fake breakout. So you're gonna, yeah, so beware of this kind of situation. As you can see here, remember that's the support from here. So price breaks down this very important significant support line, so that's very bearish, but somehow this price created a lower low, even penetrates below the Bollinger Bands lower band, but meanwhile the RSI reading, you found a higher RSI. That means even the stochastic oscillator, so that's a double divergence, but this is a bullish divergence, but you still need to be careful. It might be indicate the trend reversal, but also it might be the trend will keep going, the downtrend will keep going. So you really need to waiting for the price stands above again this support. As you can see, it's tested many times up to here, and yeah, and yes, you have this price bullish, the bullish divergence, and also price stays above the significant support line again, and that's the time you want to buy long here. Okay, once you see it's another kind of this time there's no price divergence, right? But it's just kind of falling back again. So for this particular share, and okay, so when these shares come to this point, is penetrate through the significant support again, and somehow it stays back again, and then uptrend continues up till here. You see, sometimes you see the divergence, but the price not fall significant. But basically, it depends on the retracement level. So if you have a retracement level, what I'm saying is the price actually really starts from here to here. So if you see the retracement is above the 38%, so that means a very strong retracement. So you don't the trend expect to keep going, but it's just one indication. And also the trading range is narrow, volatility stays low, so also you can check the volume as well. If the volume doesn't very significant during this correction, you can stay in, and as you can see, the uptrend keep going up to the present day. This uptrend still intact. Cool. Okay, so I go through a lot of analysis here, but the most usage areas, as we can see, is just the divergence of the RSI, and so the bearish divergence appears much often than the bullish divergence. Even so, the bullish divergence appears, it's very scary. You need to combine another analysis for example, this time is when this kind of bullish divergence also appears in a very significant support area, okay, and when it stays back above the support, and then you can buy, you can get in. So use this type of indicator wisely, combined with other indicators together. As you can see, this time we used the Stochastic Oscillator and also the Bollinger Bands and also the support resistance line. You know, all sorts of in technical analysis methods altogether, it generates a decision. So that's where we use the indicators, because we always focus on the price and the volume itself, and then we look at the indicators for the helper yeah, for the tools, you know. Yeah, so I think that's pretty much for this indicator. And there's a final thing I want to mention is, if you want to find out all these shares currently in your market have a bullish or bearish divergence, you can use our indicator filter. Okay, for example, we want to create a new filter, and this filter is, you can name it as RSI Bullish Divergence weekly, for example. Description to send. So you can add a condition. Okay, you can select the RSI, and you specify, okay, I want to scan a weekly chart. I don't want to change all this average and parameter settings for this particular indicator when you're doing the scan. And I'm going to pick up a function. So that function is that's the function that you can use, as you can see. And okay, so that's sorry, that will be in our train, another type of indicator. So let's delete this one. All right, going to the train filter. Okay, this is the first time I introduced a train filter here. Okay, so train filter, you can select the divergence scanner. Let's just try the price one first. Let's just say weekly. No, it's gonna be selecting the divergence scanner. So that's which indicator you want to check the divergence. So that's RSI weekly chart. We keep the default settings. We don't. And then the functions here, you can choose the bullish sloping divergence or bullish 12 divergence. You can add up, and then the condition is true. The bullish 12 divergence means this kind of conditions. The bullish 12s, you can see this is the 12, another 12, the second 12 is higher than the first 12, but the price in the same time has a lower 12 than the previous 12, but RSI have a higher low, so that's called the bullish 12 divergence. Okay, so you can combine another one as well in the filter. You can create another one to selecting full stochastic oscillator as well, and then you use those conditions to do the market scan, and you can our application will find all this kind of situation, and then you can filter which one is valid. You can put in the watch list, prepare the further action. So yes, this application can help us to do those, find out all the shares fulfill some sort this kind of divergence as well. So I'm gonna have a very detailed tutorial based on this train filter creation, indicator filters creations. Just go into that playlist to check those contents. But for this one, for our SI indicator, so I think I have delivered all the information that we have. Thanks for staying with me for more than 35 minutes. Hopefully the contents were really helpful, and thanks for your time, and then thanks for watching, and see you guys in next tutorial.